Moving on, Gaurav Bissa is joining us on the show from Incred. So, Gaurav, if you see, though today market has been a bit flattish because of the pressure that we are seeing from the banking stocks, but overall it has been a stellar rally, around 1,000-point rally that we have been seeing for the last 15 to 17 trading sessions. So, do you expect this to continue even going forward? Are you expecting the Nifty to break out from the 19,800 resistance level?
Good afternoon. The bigger resistances are placed at 19,850, 19,900 zone, and a close above this will lead to a meaningful breakout. If you look at the previous swing high that we made before falling below 19,000 was 19,850. We crossed that briefly yesterday, but we have closed comfortably below that, and there was a rejection that we witnessed at those levels. So unless this particular zone, this particular band is not taken out, I would not say that I'm extremely bearish at this point in time, but I would not be building long positions as well. This is what we have advised to our clients as well. On the other hand, if somebody wants to create shorts, play with 100-point stop loss, 200 points target. So I'm not looking for major downside as well, because the range is coming in a very defined manner where 19,500 with incremental put writing being seen over there. That is acting as a good support area on a short-term basis, whereas 19,900 is going to be the resistance. So the broader range for Nifty is going to be 19,500, 19,900. Any move towards 19,800, 820, 830, one can create shorts for 200 points dip. On the other hand, any fall towards 19,500, people should be looking for buying opportunities for a move towards 19,700, 750 again. So for now, I would not play for a major bearish moves or bullish moves as such. But yes, at the current juncture, it will be slightly cautious.
Okay, banks and NBFCs are looking under pressure because of the RBI's new regulations. But on the technical side, are you seeing more downside from the current levels or any stocks that are looking interesting post the fall today?
See, the fall has been restricted to less number of banks. If you look at overall structure, HDFC Bank, even with the new norms, it has still been lower only. We have not seen performance from Kotak Bank either. So it's more trickled down to the middle names. Among that, if you see, it's more so centered around RBL Bank. Bandhan, we are not seeing too much of cut coming in. So I would recommend buying CUB. That has we have as a listener, we have recommended our clients as well. CUB is looking good, coming out of a nice consolidation. It can go towards 160. So if at all somebody wants to play with the banking names, and if somebody thinks that from here on we can see a bounce in Bank Nifty as well, this reaction might not percolate to lower levels. Then yes, I think the structure looks very interesting for CUB.
Insurance and AMC stocks have been buzzing in trade. In fact, all the top FNO gainers are insurance and AMC stocks. So, any kind of technical breakout in these stocks, or is it just a move that we are seeing from NBFCs towards insurance, given the fact that there has been now RBI regulations, which would lead to slower growth for NBFCs?
No, see, insurance companies are on the verge of a breakout. So, for example, if you see SBI Life, it's on the verge of a fresh breakout. It's trading at lifetime high. A small swing breakout has been seen at 1390. So, one can either buy here, keep a stop loss of 1390 and play for targets of 1500. On the other hand, a weekly close above 1435, 1440 will result in a rising channel breakout as well, in which case you can play for even 10 to 15% upside. So, if at all somebody wants to play for insurance companies, even at the current juncture, things are looking interesting, but I would not buy each and every stock. Like I said, SBI Life, it has been outperforming throughout, and it is still showing signs of breakout. So that can be one stock that one can keep on radar. On the other hand, on a very swift note, if somebody wants to buy, one can even look at ICCL Lombard, but I would rather wait for a decline because there the breakouts were seen at 1430. At 1480, you have a slightly deeper stop losses. So on that perspective, any declines towards 1440 can be used to again buy ICCI General Insurance, ICCI Lombard. On the other hand, what we have been suggesting to the clients, we have refrained buying the private insurers for time being. What we were buying were GIC, RE, reinsurance companies, and NIACL, National Insurance. Both of the stocks have given us 25% returns in matter of a couple of months. So this is somewhere that one can still look, any declines in these names because the breakouts are more prominent in these names. So one can even keep the PSU insurance companies on radar as well.
Gaurav, what are your top picks then right now?
Yeah, so the first recommendation would be buy on HCLTech. If you see the last couple of days, we have seen the major stability coming in markets in form of ID. We have seen very strong performance from large cap names, and that makes HCLTech also very interesting. It has given a swing breakout. There's a multi-month breakout from falling trend line on weekly and daily charts as well. One can play for target of 1370, keeping a stop loss of 1290. Second would be a recommendation on Dream Folks. We have seen a very strong correction coming in Dream Folks post its quarterly numbers a few months back, and then a major correction witnessed. It has now given a breakout from what we call as a rounding bottom pattern. One can play for target price of 600, keeping the stop loss at 530.
Okay, Gaurav, thank you so much for joining in with us this afternoon on ET Now and giving us an understanding in terms of the markets as well as which are the interesting stocks and trade as well.